Good evening. This is the pre-market report for Monday, May 1st. And tonight we're going to talk about a contract that is actually setting up for a potential trade that we look for and we like to see, and that's your classic balance area trade. Now this contract happens to be the Euro. This is the profile view, this is the bar chart view. It's important to learn to use both bar charts and profile charts, because what we're trying to ascertain is in which market or in what market condition are we trading. Are we in balance? Are we in imbalance? If we're in balance, how mature is that balance area? Is it a long-term duration, intermediate term, short term, etc.? And so bar charts and profile charts are extremely useful when you use them together to help give you that view and then define specific trade setups and to measure your risk. So let's go to the profile chart first here, just to get some context. And what we have an incredibly mature structure that began last November and traded all the way through March. So this is a multi-month. I consider this to be a long-term structure. And then from this structure, what we have now is potentially a new distribution beginning. And if a new distribution is beginning from this high volume node, which is also uncannily occurs so often, it's unbelievable how many new distributions or new trends begin from the high volume node of mature structures. So that's what we have here. It hasn't been confirmed yet, but there's enough evidence for us to make a bullish assumption and perhaps to be biased to the upside in looking for trades. So we can come down, and now to me, it's really easier, and this is a personal thing, it's easier for me to find trade setups after I've identified the market condition using a profile chart on a bar chart. So if I go to a bar chart, what I have here, and you can see on the bar chart view here, let me get rid of some of this mess. I don't really see the nice Gaussian structure of the mature profile that I can see from the profile view. And remember that one of the most prominent features of the profile graphing format is that it is a noise filter. So what the profile graph does is it sort of helps define this, which when you're just looking at this, it's sort of a chop fest. But that said, if we go back to the bar chart, having looked at the profile chart, we have the context of the profile chart, and we actually know that this low began at a long to intermediate term high volume node, then it gives what's going on here more meaning. And so what we have now, we have a multi-day, 1, 2, 3, 4, 5 or 6 day balance area that has formed. So when I have a 5 or 6 day balance area, and also this balance area is at a previous sort of pivot high that was a part of the attempt to take out this upper extreme of this balance area that initially failed, came down and tested the high volume node. Now this market has traded back up into that area, and it's formed a balance area. So this gives us an opportunity to take this trade. Now there are a number of things you can do. As I said, I like to look longer term, so it can help me to develop a directional bias. So let's just take Tom's trade plan, Tom's working assumption. So I want to be long this market. So I want to be a buyer here. And if I miss the opportunity here, I want to be a buyer here on a breakout. So if I buy here and if I buy here, I'm going to have a different stop personally. Now, if I am fortunate enough to get an entry in here and it sets up on a 30-minute chart, my stop is going to be not too far below whatever that entry is on a 30-minute chart, but it certainly wouldn't be any lower than this. Now, on the other hand, if I buy a breakout trade, okay, in other words, if I miss some sort of retracement tomorrow that comes into this area and then the market takes off, and I have to buy the initiative move as it begins breaking above this area, and that's all fine and good. But remember, we're trading market condition. And if this market breaks to the upside in an initiative manner, it should do certain things and it should not do certain things. And what it should do is continue higher almost immediately. What it should not do is retrace deeply back into this structure after it attempts to break out. So based on that information, I'm willing to put my stop. It helps me define my stop. And if this market just screams higher in the morning and takes this level out and I don't have a graceful entry, then if I want the trade, I have to just pull the trigger, go long. But I'm not going to let my stop go below. And at this point in time, it's quite convenient because as I'm recording this, the Globex session low is right at the high volume node of this structure. So if I buy somewhere in here, this is going to be my stop. My initial stop will have to be down here because I have to give it enough room to breathe, so to speak, before it takes off. Now, I'm expecting it to take off pretty quickly, and I will certainly be looking for the opportunity to adjust my stop. But as an initial order entry, as an initial trade, when I enter my trade, this would be my stop based on the information I have at hand in this particular contract. So there are numerous messages in this particular report / trade lesson, and I encourage you to go back and listen to them. And one I really want to highlight is the power of these balance areas and the information that you can draw from these balance areas. Learn how to trade balance areas. Learn the different choices you have when you're trading. There is more than one way to trade them. I've gone over one this evening. I hope you find this immediately helpful, and I will speak with you again very soon.